What is the future of inflation? What is the future of crypto? And oh my God, did you hear? There's been a couple unexpected deaths of founders and partners, pioneers in the crypto space that we're going to discuss in today's episode. Also, let's talk about real estate. We all know that real estate has made more millionaires than any other industry. Is now the time to buy, or is this going to be the bust? These are all topics that we're going to cover today, and topics that you need to know about, because this is either going to be the greatest opportunity of your life or one of the biggest mistakes you ever made. My name is Chris Naugle. This is What Now? What's Next? So one of the biggest things I get asked is now the time to buy? People call me all the time and they say,
"Hey Chris, I've been watching the markets and it looks like this is the buying opportunity. It looks like we hit the bottom and we're bouncing."
And my answer is always, where are you getting your information? Because that definitely isn't what I'm seeing. You see, what I'm seeing is a whole different picture than what the news and the media want you to see. They all want you to think this is the time to start buying back in. The market had been going up, everything looked good, there was all this positive news. It's a narrative, folks. The news isn't even real anymore. I don't even know where to tell you to get the right information other than right here. Subscribe to this channel, because this is the truth. And you know where the truth comes from? Studying history, white papers, the boring stuff, putting in the time, putting in the work. And I'm not expecting you to do that, because this video is maybe going to be 12 to 15 minutes. That's all the work you need to put in to understand why right now is not the buying opportunity. And if you think it is, you have a lot to learn. So let's talk a little bit about history. Well, we can go back to 1929. We can look at that whole period. We can look at every other recessionary period, but specifically, I would urge you to focus on 1929 from an investor sentiment and from a debt standpoint. And I'd also urge you to look at the 1980s, because that was another period of hyperinflation. And they're not calling this hyperinflation, but that's pretty close to what it is. And then you'd have to really focus on the dot-com crash of the 2000s, and then, well, definitely pay attention to the Great Recession of 2008. And if you take all those and you really focus on just key components, and you mirror where we're at today, and you look at how does everything mimic what's happened in the past, you will see very precise indicators that show exactly what this recession will look like, but it's not going to just look like any one other recession or depression. It's going to be a combination of them all. You see, you got to look at the facts, and the facts are this: we're at the end of a long-term debt cycle. Never before in your life have you seen one, and never again in your life will you probably see one. Well, maybe some of you are young enough, but they're a 50 to 75 year cycle, and we are at the end. We're not only at the end of a long-term debt cycle, we're at the end of a short-term debt cycle. Then, to combat that, we're at the end of the technology cycle. It's not hard to see why we're at the end of the technology cycle, because you start at the dot-com crash and you go forward from there. But if you just think logically, there's nothing fundamental about the valuations of these tech companies, nothing at all. It's based on clicks, it's based on marketing, it's based on brand, it's based on a whole bunch of stuff that, well, back in the dot-com crash is what took the whole thing down. Very few tech companies made it through that period. And then why would we look at the 1980s? Well, inflation and the Fed's reaction to it, and how everything happened thereafter that. Because I lived through the 80s and I remember that. It was an interesting time, and if any of you lived through it, you would say the same. Some of it was good, some of it was bad. And when you look at the Great Recession of 2008, you can see asset bubbles that were created because of a lot of things that happened in the dot-com crash. A lot of stimulus money, a lot of low interest rate cycles, and those low interest rate cycles and some, lies, deceit, deception, and a whole bunch of other stuff led to what was the biggest real estate crash of our time. And some of you are thinking, that can't happen again. Well, why can't it? Because a lot of the same things just happened. We had the pandemic. You all got locked up. Well, you can call it whatever you will. Here in New York, we were locked down, and they dropped interest rates down to ultra low levels. Then they printed $5.1 trillion, issued you all checks for your businesses and for you to just go out and spend money, and then that ramped the economy back up. They told everybody, hey, you don't have to wear masks on planes, so you got on a plane and you participated in revenge summer. You see, all of these different eras, these different periods can all be put into a blender and then hit the start button, and what you have is a milkshake of what this is going to look like. So let's get into, now that we understand history, let's talk a little bit about what the future might look like. Let's talk about inflation. All year long, the Fed has been all over your news screen, all over your phone, telling you they are going to destroy inflation. I mean, they created inflation in a roundabout way by authorizing the printing of that $5.1 trillion. I mean, the government dispersed those checks to you and to your businesses, but the Fed really controls monetary policy. So they technically said,
hey, we're going to print this money and we're just going to issue it back to the U.S. government in the form of debt. So we're going to give you the money, you give us treasury bonds, we'll call it even.
Fine. Then the Fed said,
whoa, we created a little bit of an inflation problem.
But if you really paid attention, did the Fed think they created an inflation problem?
Oh, it's transitory. Nope, there's not going to be an inflation problem. It's under control.
Then they come out and they say, well,
we sort of made a mistake. There is sort of a problem, but we're going to slay the dragon.
That's what they said. So what'd they say? They're going to raise rates 7 times. Now, I remember doing trainings earlier this year in March, thinking they were going to raise interest rates 25 basis points each time, each month. And I thought, that won't be so bad. And then all of a sudden, we seen 50 basis points. I was like, oh, whoa, a little bit higher than I thought. And then they weren't getting a hold of inflation because there was too much money out there and people were still spending money for revenge summer, new cars, new planes. They were buying all sorts of stuff, anything they could get their hand on because cash was trash. In an inflationary period where inflation's running hot, people don't want cash because they think money in the bank is doing nothing for them, so they run out and buy that classic car. They run out and buy anything and everything and then some. Pain. We're going to inflict pain. And that's exactly what Jerome Powell called it. You might feel some pain. You know what that means? We're going to thrust the U.S. economy deep into a recession. Yeah, use that word however you want to think about it. Thrust the U.S. economy into a deep recession, which they still will. And then they started raising rates at a tune of 75 basis points. Just recently, we started seeing inflation numbers come down. They were anticipating 7.9 the last one. And just so you know, today is November 28th. Happy late Thanksgiving Day. They got the inflation numbers and they were 7.7. Everybody cheered.
Yes! We won! We're going the right direction.
Pause. You won? That's celebration? We went from 9 to 7.7, but the Fed said their target is 2. Now listen, I'm not maybe the best at math, but I can say 7.7 after all those interest rate hikes, after mortgages have more than doubled, after car loans have more than doubled, after credit card loans and credit card debts have gone up, and we've only gone from 9 to 7.7, and we're celebrating over that? 7.7 to 2 is a lot further to go. And the Fed knows that. And the Fed knows that as long as people are employed and working and making money, then they will continue to spend money, regardless of how expensive things are. Now, it's stunting some people. People in lower income brackets, they're having a really tough time. But you know where the real cracks in this foundation come? Is just last week. And in last week's YouTube video, you could watch this. It came out that we are at 15-year highs on debts. That's right. So what does that mean? That means all the money that people saved during the pandemic is now gone because the amount they're making doesn't cover that cost of the lifestyle they're used to. So now what do? They go into the credit cards. Let's just use the credit cards because we got a job and that job's paycheck will pay at least the minimum payment on those credit cards so we can go out and party like it's 1999. Oh, wait, I'm sorry. Party like it's 1922. No, party like it's 2022. Yeah, that's the one. Yeah, we're going to be hearing about this in the history books. So what's the future of inflation? It's going to stay hot. What's that mean? That means the Fed's going to keep inflicting pain and more pain and more pain. Well, they're going to keep raising interest rates well into 2023 is my prediction. And they're going to continue to shed off their balance sheet, unwind it, as I've talked about many times, at a tune of $95 billion.
So let's make things more expensive by raising interest rates, but then let's suck all the money back out that we just printed so there's less money in the system so banks don't want to lend, credit cards are going to make it harder to get new credit cards or new limits, bank loans are going to be tougher to get, car loans are going to be tougher.
It's going to suck for most people. So that's the future of just inflation. And then eventually they'll get it down to right around 2. They'll call it a victory. Everybody at the Fed will cheer, while all of us will be deep, so deep into a recession that we won't know our head from the hole that we, you know what. So let's get on to the next topic, crypto. It's been all over the news. I mean, you got Sam Bankman-Fried, if I'm saying that right, you know, the FTX debacle, an $18 billion exchange is collapsing. A little bit of foul play, yep, some really expensive condos out there in the Bahamas. I think, what was that condo, like 30 million or something? I could have the numbers wrong. But what does it matter when you're worth $18 billion and you just run off with some people's money? I'm not saying that's what happened, but there's something going on there. And that now has ripple effects that are going through. But you know, here's the sad part. This is the really sad part. And I'm going to get their names wrong, but there's this guy, T.T. Calander. Okay, if I pronounce that wrong, excuse me. He's one of the co-founders of a company called Amber Group. And Amber Group was only worth about $3 billion. So he's a pretty influential 30-year-old. You see, he unexpectedly died. Totally unexpectedly. In his sleep. Days before Thanksgiving. Just dead. You know, there's no one talking about it. You can't even really hear it in the news. And nobody really can pinpoint why he's dead. You know why he's dead? Because he was in the crypto space. But he's not the only one, because there's other guy, Nikola Mushkin, okay, Mushkin, something like that. Sorry if I got that one wrong. He was a visionary. Very well known, very well respected. Yep, dead. Another crypto pioneer, dead. Oh, we drowned. Yeah, it happens all the time, I guess, you know. And he was 29 years old, so I guess at 29 you haven't really mastered the art of swimming, so, you know, you just unexpectedly die from drowning. Now, you might not like how I'm saying this, but you know what? If you go back in the history books, when things like this happen, people die unexpectedly. They want to hush people up. But there's another thing going on with Nikola and Coinbase. There was some ties there. So you got to start asking the question, what's the future of crypto look like? Well, let me tell you, crypto was not going anywhere. As a matter of fact, the future of crypto is called CBDC. That's right, CBDC. So what is that? Central bank digital currency. They're already doing it in China. They're testing it here in the United States, because with this whole FTX thing, the government's got to step in and they got to regulate. Regulators, mount up, because that's exactly what's going to happen. They're going to launch a digital currency. Now, let me give you a glimpse into the future of what that looks like. Your paper dollars go away. These, which aren't really worth anything, it's fiat money, but these are no longer. Now what we have is we have a fully controlled currency that they can track, they can monitor, they can limit, they can throttle up, they can throttle down, they can do everything, because they will be in full control. Matter of fact, they will then probably spin that into this whole new green initiative. So if you've got a gas guzzler like I do, and they can monitor how much I'm spending on fuel at 8 miles a gallon, it's quite a bit if I drive the damn thing. And they're gonna basically say, whoa, you reached your maximum amount for the month, so then you can't buy any more gas. That's right, they can control that. They could control how much food you buy. They could control where you fly to. So imagine if they could track everywhere you go. And if they didn't want you to go somewhere, well, they just don't let you buy the ticket. They will use people like Sam and FTX, and they will get rid of the visionaries and the pioneers in the industry that actually could rise up and maybe challenge it. Because I will tell you one thing that I absolutely know to be true. The Fed, their number one job is to protect the dollar at any cost, by any means, including, well, you know, should have learned how to swim. Oh, well, you know, when you sleep, it's a dangerous thing when you sleep, just so you know. Well, it's dangerous if you're a pioneer in an industry that the Fed sees you as a threat. That's a little bit about what you can expect. Full and utter control of a digital currency. And you know who's to blame for that? I hate to say this, but we are. We killed the dollar. Not the Fed. No, not the government. We did it. Single-handedly. Because we thought it was more convenient to stop paying cash for things. So when this whole thing happens and all of our transactions are tracked and controlled, I want you to look in the mirror and I want you to say, I was part of that, because you were. Let's hit real estate real quick. You know, real estate's made more millionaires, probably more billionaires than any other industry. And a lot of people are still buying lots of real estate. And because, well, you can do a lot of different things for real estate. You could buy it and hope it appreciates. Probably not a good strategy right now. You can flip real estate like me and my wife did for our show Risky Builders on HGTV. You could buy rentals. You could do syndications, just participate in somebody else's efforts through a general partnership. You could do all sorts of different things with real estate. You could buy notes. But here's the thing I want to urge you. The Fed's raising rates, we already talked about that. The Fed's unwinding its balance sheet and sucking money out. Neither one of those two things are good for real estate appreciation. And the reason for it is it costs so much more money to buy the same house this year than it did last year. And I've done YouTubes on this, so please just take a moment right now and subscribe to this channel right below. Yep, just click that subscribe button. And right above, hit that little bell. Yeah, it's that little thing that looks like a bell. That's a bell, in case you didn't know. Hit that, and it'll notify you every time we do a new video so you can learn about all this stuff. You see, when they raise interest rates, 30-year mortgages get more expensive, and you price people out of real estate because they can't afford the monthly payments. Matter of fact, the bank just tells them that they don't fit in the little square box. What does that mean? Well, that means the real estate pricing has to go somewhere, and it's going to go down. But you're not really seeing that yet. You're seeing refinances slow down. You're seeing the price of real estate in places like Salt Lake City and California, highly appreciated markets. You're seeing that settle a little bit, but you haven't seen anything yet. Because when the whole market goes, I mean the stock market goes, real estate is always a lagging indicator, meaning it's going to take 6 to 8 months for real estate pricing to start settling into where the stock market prices are. And where are the stock market prices today? Down 20%? Are you down 30? Are you down even more? What the hell were you investing in? And why are you even still in the market? Because remember earlier I said, is this a time to buy or a time to sell? Well, that depends on you. It depends on your needs and goals. But I would be very cautious looking at real estate as a genius buying opportunity right now. It's still a bit early. But will it be? Yes, it will. In the coming year, 2 years, you will have similar buying opportunities in certain parts of this country, just like you had in 2009, 10, and 11. Don't believe me? That's okay. I study history probably more than you do, so we'll see who's right in a coming couple of years. But I know I'll be ready to buy, and I know some of you may not be, and that's a shame. Because when you empty the chamber, meaning you have no money saved, you have no money there because you thought cash was trash and you wanted that new Corvette, you wanted that new Tesla, you wanted that new Hummer EV, I have no idea why you'd spend that on it, but to each their own. You spent all your money where here's what I did. I've been saving. I've been moving my money. I've been keeping it working, not in any other place other than real estate, but you see, I don't want to own anything because I know when I own it, I got to worry about the price of it going down. And I got to worry about tenants not paying me rents, which is going to happen because when they lose their job, how are they going to pay you your rent? Food will become more important than Mr. Tenant's rent. Mark my words, it's happened before. And when all that happens and you're not getting your rents on these awesome rental properties that you bought at the highest prices ever because you bought at the peak because it felt good, I'm going to be there with all this money just waiting. Just waiting. Waiting for all those people that aren't collecting rents to say, I can't handle it anymore, I got to sell this. Or just waiting for foreclosures to take in, and then I just go to the steps of the courthouse and I just say, I'll buy that one, yep, and that one, and you do the bidding. I won't be alone, but I'll have a lot less competition than I do now. You see, there's only one way to make money with investing, and that is buy low, sell high, and if you do those two, well, number 3 is you can't lose money. Right here and right now is when you need to prepare. You need to be looking at what you're doing your budget, making sure you're not spending more than you're making, and making sure you stress test your life. If you lose your job tomorrow, can you afford to live, put food on the table, support your family? The answer is no. It's time to get to work. Make that hobby a reality. Figure out where that money's going to come from because you're going to need it if you want this to be an opportunity. Otherwise, you can do what the other conformers do and you can bury your head in the sand. Because in a great reset like what we're coming up on, or when you come out of a recession, more millionaires are made than any other period of time. And this time, million? Nah. More billionaires will be made out of this because they prepared. I hope this helps you, and I hope you like this video. And if you like this one, you're going to want to check this one out. That one will get you prepared even more. My name's Chris Naugle, and thank you for joining me for another What Now? What's Next?